Greetings, traders. It is I, Abdul Shabazz. And this is some real change stock options trading journey. And today, January the 23rd, what an exciting day today is going to be. I am so happy to be in a building with all of you. There's absolutely no other place I'd rather be than here. A'udhu billahi minash shaitanir rajim. Bismillahir rahmanir rahim. As we start the day. So grateful for the usual suspects that are showing up. Thank you for the sound check, making sure the sound is coming in clear and crisp. Alrighty, let's check it now. Good morning to Brian. Good morning to Prince. Good morning to Dr. J. Thank you guys for being here in the building. Thank you as I'm testing the volume. Making sure that my sound is correct. So I thank you guys for your patience. Alrighty. It's gonna be an exciting day today, guys. As always, let's make today our best trading day ever. That is the goal, to come to the market with a better version of ourselves today than we did yesterday, to be able to exercise and implement some disciplines that we want to master. Every week we should come to the market with a specific goal that we want to work on, a specific habit that we want to improve on. And this is how, little by little, we will gain mastery over ourselves and over this skill. And it is only by attaining mastery will we survive and be able to take care and provide the lifestyle that we want for ourselves and others through trading. This is not something that you can be mediocre at. This is not something that you can be okay at. This is something that you have to be head and shoulders above the rest. And I love it. Because when you show me something that there's a high failure rate, that's where the money is. I used to be a commercial fisherman. If you might have seen the TV show, The Deadliest Catch. You show me something that a lot of men can't do, that's where the money is. You show me something that a lot of people can do, there's no money there. So the fact that this has a high failure rate should excite you, to let you know that you are one of those ones, that you're not like everybody else, that you're special, and there's something about you. And I'm glad to know you. Glad you're here. Wa alaikum assalam wa rahmatullah. The bros are in the building. The bros are in the building. The bros are in the building. And the sis. Absolutely, absolutely. I have a little treat for you guys today. Can't wait to share it with you. Bismillah. go. Does anybody have any thoughts that they would like to share about this morning? Any early morning game plans? Dan has entered the building. So glad you're here with us, buddy. Any game plans today from the team? And then I will share my thoughts based on what the market is showing us. I want to give somebody else an opportunity today to share with us what your particular game plan, trading plan may be, what you're looking at, what you're thinking about. That would be awesome. Okay, here we go. Let's see what we have here. Right, some of the guys have typed. Brian has typed 44.6 go long. Let's go ahead and mark that out. 44.6. Okay. Dan is saying the break of 483.6 would be rather bearish. 483.6 rather bearish. I'm just saying, looking at the daily yesterday, we closed on a doji, looking like a possible reversal to the downside. I do agree with that. And my thoughts are leaning towards that 483.2. Dr. J is saying for a put as well. Awesome, guys. Now let's go ahead and take a look. Analyze and prepare. All right. Brian, I do agree with you as far as with going long above the 484.6 per se. Because as we look at the 30-minute chart, okay, that put us back in this area. But not only that, there is liquidity that has been built to push the price higher. So, I like that, Brian. Dan is saying a break of 483.6 would be rather bearish. And Dan, I do have to agree. Aaron is in the building. Shout out to you, Aaron. Dan, I do have to agree with you. That would be rather bearish. Same thing with you, Dr. J here, the 483 puts. And Hamza saying, leaning a little bit more towards my thoughts, looking at that daily chart. It doesn't matter what chart is. Setup is a setup. And this, when we look at it this way, Hamza, is almost a shooting star. So what I would like to see is trading beneath it. So far, I would say, Dr. J, your entry is a little closer to what I would choose, because that would give us trading underneath this shooting star. Yes, it has some bottom tail, but if we get trading underneath this shooting star, that would be, like Dan said, very heavy bearish. At that point, we're going from rather bearish to heavy bearish. That would possibly incite me, knowing that these, and we have to identify them because they are still in the building, these bulls have to get squeezed. Let's identify our enemy, then let's identify where we can shoot them at. Understanding still that there still is a lot of strength here, which is why we need to be a little safe. I like what Dan is saying. I want to recognize that it would be bearish at this point. And I like what Dr. J is saying, that she will look for an entry here. But myself, me, I've already drawn this line here before I got on with you guys. And this is the line that I like. I want to go ahead and put that here. This is the line I like. Because at this point, it puts these bulls in panic mode and sell mode. Now let's go ahead and identify them on another chart, shall we? So that was the daily chart. So I do agree with Hamza as well. I agree with everybody. And thank you guys for sharing your thoughts. I do agree with everyone. It would be more bearish here. Dr. J said this would be a good area for a put, but I personally believe this area here. And I want to show them to you on the 30-minute chart. And here they are. Here are those bulls that have really established, per se, Johanna, an area of demand right here. Should really be considered an area of intraday demand. Oh, at this point, a little bit on it. So these are the bulls that I want to squeeze right here. This is where our enemy is, and this is the strength that is keeping the stock price up right now. Followed by bulls in bear clothing here, here as well, and here as well. All of this is showing you very strong bullish action. This is a lot to overcome. So I myself would probably like to be a little bit safer, which is why I've identified the 482.7 as my area for a potential put. I want to show you guys why I've chosen that area and showing you the obvious bull strength and the hidden bull strength coming right into today, with the bulls doing the exact same thing right there. So we can't allow these candles to fool us. Right now, the bulls are in control. I like that area for you guys. And again, this is going only by what the chart is showing us. We will identify what the chart is showing us, analyze it, talk about it, gain an understanding from it, and then realize that the bulls who they have in mind, who they are trying to attack in order to get the price higher, they need liquidity. Liquidity has to be built. Liquidity has to be grabbed. And the area for grabbing liquidity for the bulls to push the price higher will come from the bears. Let's identify those bears. These are the bears. Good morning, Iyad. These are the bears that the bulls are attempting to use as liquidity to push the price higher. Ever since this bullish position was taken, we've seen, ever since this bearish position was taken, we've seen the bulls taking action. You can see that going all the way back to yesterday, which is why we hold up yesterday's chart as well. And this is a 30-minute chart we're currently looking at right now so that we can gain a wider perspective of exactly what's going on. It's always good to take a step back and gain a wider perspective of what's going on. And in doing so, this is how you can stay extra safe. That even though we have dropped from this 485.2, the bulls are revving up, possibly testing and passing. Because now, if we look at the daily candle, that's the 30-minute. Now, if we look at the daily candle, you can see here clearly on the daily candle that same hidden bulls in bearish clothing. So we just want to stay safe this morning, guys. We just want to stay safe and allow a trade to come to us. There's no need to rush anything, and that's why we like to look at everything on different time frames. We look at the weekly bottom right corner. We look at the daily upper right corner. We look at the 30-minute right here in the middle. We look at the 5-day 5-minute to see areas of support that the stock could come down to. We have the handy dandy line chart. And of course, we have the up close, in your face 5-minute chart. Now on the 5-minute chart, absolutely, Iyad, we can definitely do that and set something up, buddy. Just go to my Instagram page and send me a message over there, and we can talk over there. Now, on the 5-minute chart, you can see that the bears are fighting back this morning. Hence, why we have a doji right now, because the bears are fighting too. They know that all of those bulls that we identified here can be used as liquidity to push the price further down. It's a liquidity game. Who's going to get squeezed? Big Lance is in the building. Thank you for joining us again today, Lance. So grateful to have you here with us. Liquidity is going to move. It's just a matter of who is going to be the liquidity. Will it be the bears as the bulls attempt to increase the prices higher and higher to go past the all-time high? They are definitely setting up to do so. But as we can see this morning from these top wicks, that the bears are still very present and aggressive and not giving up just yet. Hence, that's why we have a doji. So at this moment, what we can do is wait and be patient. Allow the market to present itself to us. Allow a trade to present itself. We don't want to fight the market. We want to trade with it. And we want to use the airplane analogy. The success only comes when everything is working accordingly. I want to go over our checklist. I put together a little checklist for myself. Don't mind sharing with you all. Well, pulling it up. We'll sit here. Excuse me. Yes, Prince, that is very true. The market might go down, the market might go up, the market might go sideways. It's only three things that the market can do. The main thing that we have to do is be disciplined in our approach to trade the market. We don't care what the market does, we're going to find profits, Prince. The market could go up, down, sideways, flip, do a cartwheel. We don't care. Because we're not bulls or bears, we're winners. We don't care what the market does. We just look for opportunities to trade, and we take them when they present themselves. I know you did, Prince. That is so awesome, buddy. It's so fulfilling to hear that everyone is doing well. And we do well by exercising and practicing good habits. Hey, we say it every day, right? Let's make today our best day ever. And you did that. Congratulations to Prince. His best day ever. And Prince, just for that, Prince, we're going to go ahead and get you also a shirt from T-Shirt for Traders. Get the business out of the way. Thank you, T-Shirt for Traders, for sponsoring us. Prince, go to the Instagram, message me your information so we can go ahead and get you a shirt from T-Shirt for Traders, Prince. Here we go, buddy. T-Shirt for Traders. You're a trader, right? Then look like one. And that's T-Shirts for Traders.co. Gonna get you this shirt. Prince, probably the best day trader in the world. Yes, sir. Congratulations, buddy, on your best day ever. My Instagram is some_real_change. Yes, sir. Now, let's getting back to the trading potential checklist. Thank you, Dr. J, for typing that up. And for Aaron and Hamza, your shirts are on the way. Notified yesterday. I want to share with you guys this trading checklist. All right, here we go. I'm being vulnerable, guys. I'm exposing myself now, so please be gentle with me, okay? Be gentle with me. Do not trade before 10 o'clock. Allow the charts to form. Number 2, identify the overall trend for the day. Who's in control? Is it the Bulls? Is it the Bears? Is it no one? Identify the possible trading areas, as we did here when I asked you guys what we were looking at. And we got our teammate Brian to give us an area that he thought would be good to go long. And we got our teammates, Dr. J, Hamza, and Dan, to show us areas where they thought would be good for a put. So we want to identify the possible trading areas for both Bulls and Bears. And then we want to call out aloud what the setup is that you see. And underneath this, I'm going to add a line that comes right out of the playbook, where I remind myself, I say, sir, if you take a trade that's not in this playbook, you're gambling. If you take a trade that's not in this playbook, you are gambling. I'm going to add that line. So, but the thing I'm saying, I'm going to call out aloud what the setup is. Is it a taking a short out of resistance? Is it a shooting star? Is it a green hammer? Is it a break of a V? Is it, whatever? I'm going to have to identify what it is the setup is. Then we want to state whether it's a scalp or a trade. That's going to come from identifying the overall trend for the day. Who's in control? To let us know, once we see this setup, is this something we can scalp, or is this something we can trade? If it's something that we're going to scalp, then I want to be all in and all out within that 5-minute candle, because we know we can get paid within 5 minutes. Some candles will yield 50, 70 cents in 5 minutes. We want to identify, is it a trend trade? If it is a trend trade, then I want to take profits in that 5-minute candle, and then I want to leave runners for the next level, whether it be VWAP, whether it be support, whether it be resistance, whether it be demand, whether it be supply. I want to leave runners for the next level on the chart before entering the trade. I also need to identify the profit-taking area. Why? So I can choose the correct and correlating option price target in my bracket order. Meaning, this is what I've noticed, that if the SPY price moves $1 from 483 to 484, typically the options price will move 70 cents. So once I see where my potential profit target may be, then that's when I use that tool to measure the distance from my entry to that profit target, so I choose the appropriate bracket order price, whether I'm going for 22 cents, 33 cents, 66 cents, or $1.10. Then I choose the appropriate option chain. And 95% of the time, I'm using it at the money. Before entering the trade, let the current candle close first. Enter the trade on the following continuation candle. Enter the trade using bracket orders. And that's where it goes back to this. Well, I set my bracket order. 10% risk, 10 cent risk, 15 cent risk, 20 cent risk, depending upon what I'm shooting for reward. But typically, I'm only using a 10 cent risk Because when we are the third man out of the trade, 95% of the time, the trade immediately goes in our direction. Now, if I'm using a trend trade, if it's a trend trade, even though I'm using bracket orders, I want to use an out of the money contract with less. I want to use an out of the money with less contract as my runner. Those is my trading checkers. And if I take a loss, wait 30 minutes before taking another trade. And that's so very important. 2 trade loss max done for the day. Allow your account to live, to trade another day. The market will always be open. The market has always been open. The market will outlive you and I. Never allow one day to destroy the potential trader that you're going to be. And I need to add to that too. Come to the market with the mind frame that today is going to be your best trading day ever. So now I want to go into a little bit more. If you guys don't mind, could I get you to hit the like button right now as we patiently wait for a trade. Thank you guys for your patience. Thank you for listening. I appreciate you as well. The goal here is for all of us to achieve and be the very best that we can be. It is so important to remember that we are up against a lot to become successful traders. Not a zero-sum game. This is a negative-sum game. Meaning, in a zero-sum game, let's say a guy is at the free throw line. I say he's gonna make it, you say he's gonna miss. $10 he make it, $10 he does. At the end of that, the winner walks away with $10. The loser walks away with $10 less. That's a zero-sum game. In a negative-sum game, the loser loses more than he thought, and the winner wins less than he thought. In a zero-sum game, the winner only walks away with $7. The loser walks away with $13 because of fees. You have to take them into account. Your first enemy after yourself is your broker, who wants you to trade a lot. It's so very important that we bargain for lower fees. I'm actually waiting, and I wish I would have recorded it because I was on the phone with TD Ameritrade, and they are calling me back today. The guy said he's calling me back today, and I plan to record the conversation. I told the guy, I said, listen, there are 2 types of fees. Guys, I'm giving it all up. Man, I'm really about to give it up, guys. About to give it up. About to give it up, guys. Thought about making a video on this, and I probably will, because there are people who probably won't see this. No problem, but this is still some beneficial information. But I'm gonna give it up to you guys first. All right, this is something I wrote on. Block the charts. And you got to know this. You have to know this. For starters, some of you guys remember when I asked you, I said, who made more money last year, you or your broker? Go to your statements in your back office and look how much money your broker made. It's ridiculous. As we see on the daily chart, is now starting to reveal those hidden bulls that we were talking about, and their plan to attempt to squeeze the bears. But we will see what happens. This is who is under attack right now. This gold line represents pre-market high. This gold line represents pre-market low. We are now trading above VWAP. And also, according to the rules of the candlesticks, a failed shooting star is a bullish opportunity, because I can identify for you here on the daily candle, this is the liquidity that the bulls would like to use to push the price higher. These bears are the liquidity that the bulls would like to use to push the price higher and start causing them to cover. Bearish covering is buying. Buying causes the stock price to go higher. So it is at this area that the bears are going to have to average down. They're going to have to come back in strong and save their position. And they have done so this morning, as we've identified here. They've done so this morning. Aaron is in the house. Thank you, Aaron, for joining us as well. How do you get the VWAP to show on the charts? Well, let's go to maximize. And guys, I think I'm going to go ahead and do away with pre-market. Right? We understand that the bears are above this area. We understand the bear presence is heavy. We understand that above this is a potential call situation. And below this is a potential put situation. And the middle is chopped and dangerous. I want to go ahead and get rid of pre-market. Okay, now our teammate asked us how do we get VWAP on charts. I'm gonna come in close right now just so I can do the VWAP for you. Hit edit studies. It's this little chemistry bottle. It's like a chemist, little chemistry bottle right here. Go ahead, hit that chemistry bottle. And then it brings up studies. Come down here to VWAP, which stands for volume weighted average price. Here it is, VWAP. You hit VWAP, and then after you hit it, you highlight it, and then you add it. And then once you add it, you click this button and show here. And it is here where you can change your color. So I've actually made VWAP yellow. I made my negative deviation, red, and my positive 2 deviation off of VWAP, I've made it green. Those are the additional things that you see as well. Well, look at here. Go ahead and back up, give it a bigger view so we don't get too excited. It is looking good. So now from this view, you guys can see why I personally have chosen the 482.75 as my area for me to take a safe put. That would mean a lot of bulls would have to cover in this area. Not stating that there won't be a trading opportunity before here. Perhaps who knows what the candles may bring? No one knows what the market is going to do. It is 10 o'clock, so I have reached my first goal. I did not forget about you guys. Let's get back to the obstacles for a novice trader. Number one, you have 2 types of fees. You have commission and you have regular fees. My commission fees are 55 cents per contract. Okay? So example, if I take 10 contracts at 55 cents, then it costs me $5.50 to buy, $5.50 to sell. I'm paying $11 round trip. Now my regular fees are 1 cent per contract. Do the math on that, it's 1 cent per contract. So that's a total, if I take 10 contracts, of $11.20 to execute 10 contracts, win or lose. $22 to execute a contract of 20, and $33.60 to execute a trade of 30 contracts, win or lose. You could add the cost of your fees to your profit target accordingly. This is what I'm giving up for you guys, what I've decided to do. So now, if you got 10 contracts with a profit, okay, of 10 cents, for example, that's $100. But when you take out the $11.22 fees, you only net $88. But if you now change that target from 10 cents to 12 cents, okay, that now gives you $120 after fees. You walk away with a net of $108. Now you're at least over the $100 mark simply by changing your profit target by 2 cents by 2 contracts per target. I'm sorry, 2 cents from 10 cents to 12 cents. Same thing here. If I'm using 20 contracts with a 10 cent profit target, okay, that's going to be $200. But after I take out the $22.40 to execute the trade, I'm only going to walk away with $217.60. But if I change my bracket from 20 cents to 22 cents, now, okay, my profit, okay, is $440 minus the $22.40, and I'm walking away with $417. So for me, that's that sweet spot. A 22 cent profit target with a 20 cent contract. A 20 cent bracket order with a 22 cent profit target and 20 contracts. That's a sweet spot. So, but again, my point is that what I did was for my fees, I added it. So if I'm using 10 contracts, if I'm using 10 contracts, then I'm adding, like, if my profit target is 10 cents, it's 12 cents. If my profit target is 20 cents, it's 22 cents. If my profit target is 30 cents, then it's 33 cents. Let me show you that here in my active trade. Okay, here we go. So my profit targets in my bracket order are 22 cents, 33 cents, 55 cents, 66 cents, and $1.10. So what I do is once I decide where I want to get in at, I then grab that tool, this tool right here, so that I can measure from where I want to get in to where my profit target is going to be. Once I do that, it tells me in the tool, how big that move was. Let me do that again. So it's telling me right there in that move that this is a $1.70 move, $1.52 move. You see that? It says 0 days. Let me take my hand off of it. So I took my hand off of it. 0 days, 0 hours, 5 minutes, 2 bars. It's a 31% move from where I got in at, and it's $1.49. So remember what I said. I said I've seen that if the stock price on the SPY moves $1 on an option chain, that'll move 70 cents. So when I'm anticipating a move that's 70 cents, I go ahead and I choose a 60-cent profit target. So that's telling me that I'm expecting $1 or more out of this. So I'm going to go with a 60-cent profit target on my bracket order. Now, what I'm saying is that if it's a trend trade, because one thing about the bracket order, you're going to be all in, all out. And you could potentially leave a lot of money on the table. So what I'm going to do is take a second trade with a out of the money contract, because they're a lot cheaper. What's today? Like let's say we were taking a call, with an out of the money contract, because they're much cheaper. At the money, in the money. This is in the money. $6, $5, $4, $3, $2, $1. This is at the money. 97 cents. And this is out of the money. 50 cents. Meaning that the price has to come to this. As it comes to this will go up. So if I think I'm going to have a runner, then I don't mind, maybe getting 5 contracts here or 10 or whatever, depending upon what the setup is. If I think I'm in a trend and it's going to run down to my next level. I just wanted to share that with you guys so you understand that this is a negative sum game. That you are up against your broker, you are up against commissions, you are up against fees, you are up against market makers. And the only reason why I didn't talk a lot about slippage, because that's the next thing, is because we only trade the SPY. And here on level 2, I'm going to give you an example of the bid and the ask. See how tight it is, 484.05, 06. It's only 1 cent difference. So that means even if you had to get out on a market order, you got to slam the market, you're not going to get a lot of slippage because it's only 1 cent different between the bid and the ask. Well, other stocks might have 3 cents, 5 cents, 7 cents between the bid and the ask. If you have to slam the bid could be way lower than the ask. So that's one beneficial thing about trading the SPY, is that we don't suffer a lot of slippage, thank God. Because we suffer enough with fees, we suffer enough with commissions, we suffer enough with algos, we suffer enough with other traders trying to take our money, and it just is what it is. So the fact that we found camaraderie within each other, it's my duty obligation to share this information with you guys so that we all can win. So getting back to my point, I called up TD Ameritrade. I said, you can't keep charging me 55 cents a contract. No, sir, buddy. No, sir, buddy. Because I'll go to international brokers, I'll go to IB, I'll go to Trade Zero, I'll go to Sure Trader. Okay? I'll take this show on the road, buddy. I trade options every day, Monday through Friday, every day, and have been doing so consistently now for about 7 months. You're going to have to give me some better rates. They said, okay, well, Mr. Shabazz, we'll go ahead and get this information along and we'll give you a call back. I said, you're going to give me a call back? He said, yeah, we're going to give you a call back. I was indubitably. I'll be waiting on it, buddy. So when they call, inshallah, I'm going to go ahead, God willing, try to remind myself to tell him, hold on before you start talking. So I set the recorder to record it to see if it works. But I mean, I told him, I said, listen, I plan to be in this a long time. I don't plan to go anywhere. And if anything, I only plan for my size to increase. He said, oh yeah, well, by how much? He really asked me that. Good morning, Seymour 206. I hope that information was beneficial for you guys. If it was, please hit the like button. And thank you, buddy, for joining us. You haven't missed anything. We're just observing the market right now. Thank you. I want to continue to share. And if you guys come across anything, or you guys, information comes across your desk, please feel free to share it with us so that we all may benefit. The market still hasn't decided anything today, as we still have a doji, and there's nothing wrong with that. Today is Tuesday, but more importantly, we are being safe. And that's how we like to trade. We either like to make money or stand aside. Those are the two choices that we like here. Make money by taking good trades, or simply stand aside and watch the bullies fight. This is the largest ETF there is. There's hundreds of millions, billions under contract. Billions under management they have to trade. This market is gonna move. But the benefit for us is that we don't have to trade. We can pick and choose when or if we want to get involved. I'm going to go ahead and step away, get me a cup of, I've talked myself into dry mouth. I need a drink right now. No, I'll be right back. got my attention. Got my attention now. Now I would just like to see the stock stay under VWAP. Oh yeah, absolutely. Just imagine, you know, keep in mind it was at 484.6 this morning. Okay. It was already up to, I'm sorry, 484.7 this morning. 484. Yeah. And just like yesterday, when it reached this area, it came all the way down to the 483.2. So if you can just imagine, it's the same thing here. The stock is coming down, and now we're getting the bounce. This would be a good area to potentially enter a put right here, wanting to see a close of the candle. But also keep in mind, we're also close to the 30-minute candle. So let's take a look at the 30-minute candle. Take a step back for a bigger, broader view.
Bluetooth connected.
So we do have a red, lovely candle on the 30-minute. I would like to see a continuation. Come on down. Again, I believe where the safer area is and a much bigger play. I want to still keep everything in perspective. As Dan said, even with that drop, still in range for bulls. Why I've chosen this area myself for put, because from even this area where a potential put could have been, the risk versus reward is not great. It's only about a 50-cent move down to this area of demand. Just because we identify a trade does not necessarily mean that we will take it. But we still want to identify where and what's going on. There is a line. This is the area of demand, no doubt. It has to be respected. Not looking good at all on the 30. Not looking good at all on 30 minutes. In fact, we see the same thing that we've been seeing and been pointing out. These bulls hiding in bear skin, but still recognizing their heavy bears overhead. The safe place is to be on the sidelines. Let the bullies fight it out. And whoever is the victor, that's my side. Here is the 10:30 candle that we were waiting on. Yes, we do. It's the break of demand, my nemesis. This used to be in the playbook called the break of demand play, but my winning percentage on this was so low, I don't trade it anymore. It was the break of demand that really helped me emphasize allowing the candle to close and getting in on the confirmation candle. Because I would get washed out long so bad. So I learned. Better to be the third man out of the plane. To be the first one out of the plane. It's better to miss a trade than to be early on the trade. How about that? How about that? It's better to miss a trade than to be early on a trade. Any thoughts, guys, on the put here? We've got 1 minute left in this 5-minute candle. It is in an area of interest. This is that infamous break of demand. Let me show you a little bit more so you can really understand what's going on. We see very strong bullish support here at the 483.2. So even in getting in, I'm just saying me. Well, I don't want to say that because, again, this is not financial advice. Do whatever you want to do. I'm just identifying what we're seeing on the charts. But I don't think the risk to reward is great enough for me to get in. That is the reason why you have not heard me mention a put in any area except clearance. Anything above this area pre-market low can be saved. Very strong bullish presence at this 433.2 area. We want a nice tranquil trade. We don't want a stressful trade. We want easy money. We don't want something that's going to go battle back and forth and flip. We want something that's going to put in a nice candle like this. Nothing but time left. Nothing but time left. Again, on the trading checklist, identifying the overall trend for today. Who's in control? Right now, it appears that the bears are in control. Identifying the possible trading areas. We've identified 486, 484.6 and above as a potential trading area for a call. And we identified 482.75 as a potential trading area for a safe put. Waiting for the stock to reach that area. Once it does, we will call out what the setup is. If we take a put, then it will more than likely be a trend trade and not a scalp trade. So we'll be looking to take profits in the first 5 minutes and leave runners for the next potential level. With that being the case, identifying a potential profit-taking area for a put to me would be the 482.5.
Bluetooth disconnected.
We'll be using a 483 put. Take a look at that. Even though this would be a safe area for a put, we have to look at potential levels of resistance here, of support rather. Can't deny that there is heavy liquidity right here. This is a lot of liquidity at the 482. A lot of liquidity at the 482. Identifying potential profit targets is what I'm doing now. What makes sense? Push. Expect resistance. 482. Acknowledging this level of 482.5 because that would close the gap. But getting in at the 482.7 does not leave a very pleasing risk to reward. That's only 25 cents on the SPY chart itself. That area. Taking it down to the 42 gives you 76 cent move. So with that, I'll be comfortable taking a 22-cent profit target, maybe a 33-cent profit target. You get a flush. I do expect support because there's very strong bullish action in this area. So how hard it may come down, how far, I do not know. Depends on the domino effect. No one knows what is going to happen. If anyone tells you that they know what the market is going to do, they are lying. All we can do is look at history and know that market has memory and see the areas where there have been activity at, areas that have drawn to be like a magnet, and potentially expect that when the stock price reaches that area again, it may repeat itself. We also have to identify that we are at all-time highs. No one has traded the market this high before, so therefore the playing field is level. And sometimes the best way to win is not to be the one who loses. Sometimes it's a matter of not making a mistake before your opponent does. And in our case, that means waiting for the best setups. This is the Tuesday. Yes, that is a potential put, especially if you're looking at it also on the line chart. It is a potential put, but the risk to reward is not salivating right now. I do do like the position that we are getting in on the daily chart. Let's take a look at that real quick. I do like the position we're getting in on the daily chart. Some of you may be tempted to get in right now. Trade at your own risk. This is not financial advice. I'm not a financial advisor. I'm just your teammate that's saying, hey, look out. I see the enemy ahead. I see a trap, teammate. Watch where you step. How the market responds here. That's what we want to see. Definitely not opposed to trading. I love trading. Just love winning more. Love making good trades. Have good habits.
Bluetooth connected.
Getting myself in position to be ready. Get ready, you don't. I know, right? Stay ready, you don't have to get ready. But this is a clear indication, guys, why I did not mention a put. Can you imagine, just for 1 second, what this bounce would have done to the option price? My goodness, you would have been sick. Knowing how that option, you would have been up nice and in the blink of an eye. That's why we wait. We don't want to be the first man out of the plane. I'd rather miss a trade than be early. Trade very tranquil. This is why we stress allowing the candle to close. Please excuse my slang terminology, but this is an example of coming to the party, opening the door, sticking your toes in, but then turning around and stepping back outside. So you walked in and you stepped in, everybody come running to you, ooh, hey, you're like, psych! You step right out and close the door, trapping everyone. No, we want you to come on in, cross the line, and close here. We want the candle to close in our desired area. We don't want to be fooled by market action. We want to identify where the candle closes. This market action is so finicky. That's one of the reasons why we look at the 5 minute and not the 1 or 2 minute. Rich Cooper says, I'm looking at a 483 put, quick in and out. Love it. And thank you, Rich, for joining us. So glad to have you here, buddy, and part of the team. We're just sitting around looking for a safe trade. And history has shown us that the market has bounced several times at this area. It's done it once. It's done it twice. It's done it 3 times. Yes, 4, even 5. And now 6 times. So that's a very strong indication that if we can get below these guys and cause them to cover, we will see a very nice push to the downside, as they will be the liquidity to do it. On the flip side, we do see a very slight argument to take a call here because we have seen the market bounce from this area the same amount of times. However, that 484.1 has been the definitive line that the bears have put in the sand. Squeezing these bulls would be absolutely lovely. Yep, Dan, I thought it was too until the candle closed. A failed hammer is also a bearish sign. However, nonetheless, we do see the support here by the bulls, as this bottom tail indicates bulls buying lower prices. So there are bulls in these waters. They say alligators in the water. There are bulls in these waters. I see it, guys. I see it. But I'm not convinced. I'm not yet. Do whatever you feel, whatever your risk tolerance will allow you to do. There is money to be made. All I can do is just say, hey, teammates, watch out for the alligators that are in the water. If you have alligator repellent, jump on in. Still like it. Dude, I like you guys. I want to get in a put myself. I'm just waiting for a safe entry. And I've really gotten to the point that I'd rather miss a trade than be early on a trade. This is my area of interest. Yes, it is. sticking with my discipline in the area that I have chosen to take a safe put. I will not take you guys and lead you through these alligator infested waters. Let's allow the big boys to get the price over. Again, it is so vital that once the trade gets close to your area, that you start implementing the disciplines of entering the trade. As it appears, tide is turning. I want to thank you guys for being safe and allowing me the opportunity to assist and help navigate us through these treacherous waters. Everyone's input is vital. Everyone's input is important. Everyone's comments are read out loud. We all are a team. We just have different positions to play on the team. But together, we win by keeping each other safe, demanding that we reinforce good habits from one another, and supporting one another. We've already identified that the stock does have the ability to bounce at this level. So with this candle closing above and making a new high above the most recent 5-minute high would be a potential call, at least the VWAP. But again, if you want to see a candle close above the most recent red 5-minute candle, we're pretty much at this area where the wick is. I'd like to see a candle close here with a continuation candle if you're itching for a trade. But I just want you guys to be safe, but I still want to identify what history has shown us has taken place 1, 2, 3, 4 times in the past. Now, if it doesn't happen, that would be a great indication that maybe, just maybe, something different is about to happen. For us to reach this level and not bounce. Okay. I cannot thank you guys enough for tuning in with me on this morning show. The key things that we want to do right now as we approach the 11 o'clock hour is set alarms. Set alarms so that when the stock does start trading in your area of interest, you'll know about it. You will be looking out for it. You will have time to prepare yourself for the trade. I myself would love to be notified if this stock reaches this intraday area of demand. So I'm going to click alert. Let me know below the 482.95 that the stock price starts trading below this area. I will then start looking for an entry for puts, targeting 482, knowing I'm gonna have a little bit of resistance at the 482.5 because that will be officially closing the gap. But it's also at this level that on the daily chart we will be trading so far below yesterday's low that these bulls could potentially be forced to cover, and I want to be involved when these bulls turn into hogs and sheep. The safe area for me is here, and I believe we can get down to that 482 only because we've done it in the past. There's that call I was telling you guys about, but we did not get the close above it as I would have preferred. But nonetheless, we still now have trading above it. Not a textbook, not an A+, not a B+ setup, but just an acknowledgement. And one thing that our teammate Lance has showed us, and it reminds me of what I told you guys in the past. We need to think that we are working our way towards taking large size. More size, less trades. That is how we defeat the broker. By trading less, using more size with confirmation. That is how we begin to see the difference in our trading account, seeing the difference in what we pay ourselves, and then seeing the difference in our contributions. And you can also see the importance of following that discipline and that rule of wanting to see that price close above this area and then have the next candle start above this area with a continuation candle going up. Little bitty things like that make a difference. But recognizing when the trade is not at its best, standing aside is the best to do overall. Coming up here to the top, knowing that all of these bears could be used as liquidity, I'm going to go ahead and set an alarm up here as well. Preserve my mental capital. Preserve my financial capital. Go get a cuppa, lift some weights, eat a sandwich, read a book, work on a project, but don't stare at these charts, because when you stare at them, you start to see something that's not there. Look forward to you guys joining me tomorrow, same time, same channel, same stock. This is Abdul Shabazz. And I'm sorry. Well, first of all, let me thank you guys who hit the like button. And for those 6 people who did not hit the like button, I'm sorry there was not a trade today. Every day there's not going to be a trade. But around here, we either like to win or we like to stand on the sidelines. And hopefully tomorrow, I will be able to earn your like. But I thank you for attending nonetheless. This is Abdul Shabazz for some real change, stock options, trading journey. Because it is a journey, and I'm glad we're on it together. Bye for now.